Following liabilities, let me introduce stockholders' equity, which represents the claim from the owners or shareholders. The amount of shareholders' equity, if we use accounting equation, it equals to the difference between assets and liabilities. Usually the shareholders' equity is greater than zero, but in some cases it may be negative when the liability is greater than the assets. The stockholders' equity includes two parts. One is contributed capital, which is from the contribution of the owners, while the other is earned capital. This account represents the accumulated profits or losses. The stockholders' equity, also named net assets. It is the amount total assets net of liabilities, the claim from the creditors. It is also the book value of stockholders' equity, although it is nothing to do with the market value of the equity. While retained earnings represents the realized earnings, there is another account, accumulate other comprehensive income, AOCI. This represents the unrealized earnings. Here is an example of stockholders' equity. Again, Nike. It reports the contributed capital in two accounts. Common stock, additional paid-in capital. Why common stock only $3 million? And the reason is common stock only represents the bar value. If the bar value usually is a very small number, for example, 1 cent, a very small amount. While the difference between the total contributed capital and the bar value is additional paid-in capital. We can also use APIC, the abbreviation for additional paid-in capital. Total amount of common stock and additional paid-in capital represents the amount of capital raised from the primary market. And retained earnings, if it is positive, we report it as retained earnings. If it is negative, we report it as deficit. It also indicates the company has accumulated net loss. This is realized earnings. The other account reports the unrealized earnings. I will introduce the difference of these two earnings later.